Hello everyone, welcome to Accountancy class. I am Divya, lecturer in Commerce, gsipucmysuru College, Mysuru. Today in this session, let us learn about depreciation, provisions and reserves from chapter 7, session 1. Students, you are aware that fixed assets are the assets which are used in the business for more than one accounting year. Fixed assets tend to reduce their value once they are put to use. So depreciation means decline in the value of the fixed assets due to use, passage of time or obsolescence. If the business enterprises procures a machine and uses it in the production process, then the value of the machine declines with its usage. Even if the machines are not used in production process, we cannot expect it to realize the same sales price due to the passage of time or arrival of new model. Depreciation may be described as a permanent, continuing and gradual shrinkage in the book value of the fixed assets. The features of depreciation. So first feature is decline in the book value of the assets. Second one, it is the permanent, continuous and gradual decrease in the value of the fixed assets. It is calculated till the end of useful life of the assets. So it is a non-cash expenses and it is continuous process. And it is a revenue loss and permanent charge against the profit of the organization. Arises on account of wear and tear by continuous use. These are all the features of depreciation. There are some terms like depletion and amortization which are also used in connection with depreciation. Depreciation means decrease in the price value of an asset. Depletion, it is the term used in the context of natural resources like mines, quarries, etc. that reduces the availability of the quantity of the material or asset. It is known as depletion. Next one, amortization. Amortization refers to writing off the cost of intangible assets like patents, copyright, trademark, goodwill, etc. which have the utility for a specified period of time, that is known as amortization. This depreciation is calculated on the fixed assets, example furniture, machinery, etc. This one depletion example is mines, quarries, etc. Amortization is calculated on copyrights, trademarks, goodwill, etc. Next one, causes of depreciation. First cause is wear and tear to use or passage of time. Wear and tear means deterioration or consequent diminution in an asset value arising from its use in business operations for earning revenues. It reduces the asset's technical capacities to serve the purpose for which it has been meant. Next one, expiration of legal rights. Certain categories of assets lose their value after the agreement governing their use in the business. It comes to an end after the expiry of predetermined period. For example, patents, copyrights, etc. Next one, obsolescence. That means no longer in use. It is the another leading factor to depreciation of the fixed assets. In ordinary language, obsolescence means the fact of being out of date. So the old assets may be outdated due to new inventions, improves in the technologies, improved techniques and technological advancements. Next one, abnormal factors. So depreciation may also arise due to the loss in the value of the assets by accidents, damage, etc. These are all the causes of depreciation. Next one, need for depreciation. First one is matching of concepts and revenues. The acquisition of the fixed assets in the business operation is that these are used in the earning of revenue. Once the asset is put to use in the business, it loses its value. If depreciation is not charged, the profits are overstated in the final accounts of the organization. That's why we should calculate the depreciation. Next one is tax. Depreciation is a deductible cost for tax purpose. If depreciation is not charged, profit and loss account will show more profits. Then the organization requires to pay more tax on the profit. So that's why it is an admissible expenses as per the income tax. Next one, true and fair financial position. If depreciation on assets is not provided for, then the assets will be overvalued. Then the balance sheet will not depict the current financial position of the business. That's why depreciation must be calculated. Next one, compliance with law. So it is compulsory to provide for depreciation on fixed assets in use before distributing dividends to shareholders. That means depreciation has to be charged to satisfy legal requirements. Next one, ascertaining accurate cost of production. Depreciation on fixed assets in the factory is a part of cost of production like payment to raw materials, wages, power, etc. If it is ignored, we are not in the position to ascertain the exact cost of production. This will result in lower sales price and reduction of the profits. So these are all the needs for depreciation. ಯಾವಾಗ ಡಿಪ್ರಿಸಿಯೇಷನ್ ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಲ್ವೋ ಅವಾಗ ಪ್ರಾಫಿಟ್ ಹೆಚ್ಚು ತೋರಿಸುತ್ತೆ ಬಿಸ್ನೆಸ್ ಅಲ್ಲಿ. ಪ್ರಾಫಿಟ್ ಹೆಚ್ಚು ತೋರಿಸ್ತಾ ಇದೆ ಅಂತ ಹೇಳಿದ್ರೆ ನಾವು ಗೌರ್ಮೆಂಟ್ಗೆ ಹೆಚ್ಚು ಟ್ಯಾಕ್ಸ್ ಅನ್ನ ಕಟ್ಟಬೇಕಾಗತ್ತೆ. ಹಾಗೇನೆ ಫಿಕ್ಸ್ಡ್ ಅಸೆಟ್ಸ್ ಮೇಲೆ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಅನ್ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಲಿಲ್ಲ ಅಂತ ಹೇಳಿದ್ರೆ ಪರ್ಚೇಸ್ ಎಷ್ಟು ಮಾಡಿದೀವೋ ಅಷ್ಟೇ ವ್ಯಾಲ್ಯೂ 3 years ಆದ್ಮೇಲೂ ಕೂಡ ಇರುತ್ತೆ. ಯಾವಾಗ ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ನಾವು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಲ್ವೋ ಅಸೆಟ್ಸ್ ವ್ಯಾಲ್ಯೂ ರೆಡ್ಯೂಸ್ ಆಗಲ್ಲ. ಅಸೆಟ್ಸ್ ವ್ಯಾಲ್ಯೂ ರೆಡ್ಯೂಸ್ ಆಗಲ್ಲ ಅಂತ ಹೇಳಿದ್ರೆ ಬಿಸ್ನೆಸ್ದು ಫೈನಾನ್ಷಿಯಲ್ ಪೊಸಿಷನ್ ಕೂಡ ಕರೆಕ್ಟಾಗಿ ಇರಲಿಕ್ಕೆ ಸಾಧ್ಯ ಇರಲ್ಲ. ಹಾಗೆಯೇ ನಾವು ಡಿಪ್ರಿಸಿಯೇಷನ್ನ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಲಿಲ್ಲ ಅಂತ ಹೇಳಿದ್ರೆ ಜಾಯಿಂಟ್ ಸ್ಟಾಕ್ ಕಂಪನಿಯಲ್ಲಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ಗೆ ಡಿವಿಡೆಂಡ್ಸನ್ನು ಹೆಚ್ಚು ಕೊಡಬೇಕಾಗತ್ತೆ. ಯಾಕೆಂದರೆ ಪ್ರಾಫಿಟ್ ಕೂಡ ಹೆಚ್ಚು ತೋರಿಸ್ತಿರುತ್ತೆ. ಇವೆಲ್ಲ ಕಾರಣದಿಂದ ನಾವು ಬಿಸ್ನೆಸ್ಸಲ್ಲಿ ಡಿಪ್ರಿಸಿಯೇಷನ್ಸನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು. ನೆಕ್ಸ್ಟ್ ಒನ್, ದ ಫ್ಯಾಕ್ಟರ್ಸ್ ಅಫೆಕ್ಟಿಂಗ್ ದಿ ಅಮೌಂಟ್ ಆಫ್ ಡಿಪ್ರಿಸಿಯೇಷನ್. ಫಸ್ಟ್ ಒನ್ ಈಸ್ ಕಾಸ್ಟ್ ಆಫ್ ಅಸೆಟ್. ಕಾಸ್ಟ್ ಆಫ್ ಅಸೆಟ್ ಇನ್ಕ್ಲೂಡ್ಸ್ invoice price and other costs which are necessary to put asset in use or working condition. Next one, estimated net residual value. Residual value means scrap value or salvage value for accounting purpose. It is estimated net sale value of the asset at the end of its useful life. So this net residual value is calculated after deducting the necessary expenses for the disposal of the asset. Next one is depreciation cost. Depreciation cost. Depreciation of the asset is equal to its cost. Estimated useful life of an asset. It depends on usage of that particular asset, technological changes, maintenance of the asset. Next one, method of calculating depreciation amount. The depreciation amount to be charged for during an accounting period depends upon the depreciation amount and method of allocation. Here cost of asset purchase price plus transportation installation charges. Estimated net residual value equals to scrap value or salvage value or residual value. Next one, method of charging depreciation. So depreciation is charged under straight line method, return down value method, annuity method, depreciation fund method, insurance policy method, revaluation method. But in this year, we are going to learn two methods of calculating the depreciation. One is straight line method and second one is return down value method. So depreciation is calculated on the type of the asset, nature of the use of the asset and circumstances prevailing in the business. So first method is straight line method. In this session, let us know about the straight line method. This method is also known as fixed installment method, equal installment method, original installment method. Under this method, a fixed percentage of original cost is written off every year as a annual depreciation. For example, the original cost of assets is rupees 1 lakh. Rate of depreciation is 10% per annum. When we calculate the depreciation, 10% on 1 lakh equals to 10,000. So every year 10,000 written off as a depreciation. Suppose if the assets are used for 6 months in a particular year, then only for 6 months depreciation should be charged on the assets in that year. Assets 1 year fully use ಮಾಡಿದ್ರೆ ನಾವು 1 year ಗೂ depreciation ಅನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕು. ಅಸೆಟ್ ಯೂಸ್ ಮಾಡಿದ್ದೇ 6 ಮಂತ್ಸ್ ಆಗಿದ್ರೆ ಆವಾಗ ಆ ಇಯರಲ್ಲಿ ಬರೀ 6 ಮಂತ್ಸಿಗೆ ಮಾತ್ರ ಡಿಪ್ರಿಸಿಯೇಷನನ್ನು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡಬೇಕಾಗತ್ತೆ. ಸೊ ಫಾರ್ಮುಲಾ ಫಾರ್ ಆ್ಯನ್ಯುವಲ್ ಡಿಪ್ರಿಸಿಯೇಷನ್ ಈಕ್ವಲ್ಸ್ ಟು ಕಾಸ್ಟ್ ಆಫ್ ಅಸೆಟ್ಸ್ ಪ್ಲಸ್ ಟ್ರಾನ್ಸ್ಪೋರ್ಟೇಷನ್ charges plus installation charges minus scrap value or residual value or salvage value divided by estimated useful life of the assets. How to calculate rate of depreciation? If depreciation percentage is not given, so rate of depreciation equals to annual value of depreciation divided by acquisition cost into 100. So then what are the advantages of straight line method? It is very simple, easy to understand and apply. Second one, assets can be depreciated up to the net scrap value or zero value. Third one, every year same amount is charged as depreciation in the profit and loss account. This makes comparison of profits for different years easy. This method is suitable for those assets whose useful life can be estimated accurately and where the use of the asset is consistent from year to year, such as leasehold buildings. So these are all the advantages. So it is very easy and simple method, very easy to compare the profit year after year, and it is suitable for the assets with a small value which do not require much repairs and maintenance and which render service year after year, like furniture, plant, etc. Then what are the limitations of straight line method? So this method is based on the faulty assumption of same amount of utility of an asset in different accounting years. Secondly, with the passage of time, work efficiency of that assets decreases and repair and maintenance charges increases. And also it becomes very difficult to calculate depreciation on each machine when there are number of machines in the organization with different lifespan, and also no provision is made for the replacement of the assets. So these are all the limitations of straight line method. So let us know how to calculate the annual depreciation. A company purchased machinery for rupees 1,80,000 and spent 9,000 for its installation and 1,000 for its transportation. The estimated life of the machinery is 5 years with residual value of rupees 15,000. Find out the amount of annual depreciation. Here the cost of the machine is 1,80,000 plus transportation charge is 1,000 plus 9,000 is the installation charge minus 15,000 is the residual value divided by estimated life of the asset is 5 years. So the total is 1,90,000 minus 15,000 divided by 5 years equals to 1,75,000 divided by 5 equals to 35,000. This is the annual depreciation. Next one more example. 1/4/2019, a firm purchased machinery at a cost of rupees 1 lakh. Its life was estimated to 10 years with a scrap value of rupees 10,000. So the actual value of the machine is 1 lakh, scrap value 10,000, and the estimated year is 10 years. 1 lakh minus 10,000 equals to 90,000 divided by 10 equals to 9,000. This is the annual depreciation during the year. Next one, on 1/4/2019, a company purchased a machinery for rupees 22,000 and spent rupees 3,000 for its transportation. The estimated life of the machinery is 3 years and its residual value is estimated at 1,000. Actual cost of the machine is 22,000 plus 3,000 is the transportation charge minus residual value is 1,000 divided by 3 years. 22,000 plus 3,000 equals to 25,000 minus 1,000 divided by 3 years equals to 24,000 divided by 3 equals to 8,000. The annual depreciation during the year. I hope today's session was useful to you all. Thank you.